So let's begin with the big issue. Markets nervous about a growing trade dispute.
It's all really about a trade war.
The tariff noise,
trade tensions.
Rhetoric with China is not only back, but escalating.
And also tariffs on Mexico.
Mexico.
The Mexican incident is very unsettling.
This is a real problem.
People are very nervous.
Very, very nervous.
The downside risks to growth have certainly increased over the last couple of weeks.
This is what the market's trying to do, just recalibrate to how much risk we should be pricing in.
People are coming around to all of the various factors and uncertainties.
Uncertainty is what markets worry about.
The unpredictability of it.
A tweet in the middle of the night can change everything.
And I don't think there's any reason to believe that will change.
Joining me around the table here in London, Jane Foley of Rabobank, Andrew Sheets of Morgan Stanley, and Geoff Yu of Morgan Stanley Wealth Management. Guys, great to have you with us. Geoff Yu should be of UBS, I should add, before Geoff corrects me. Jane, let's begin with you. The trade story, front and centre once again. How on earth do you come up with a forecast when no one knows what is going to come next?
Well, no one knows what's going to come next, but surely then that means that people are just going to buy risk, and that's safe haven rather, which is exactly what we've seen over the last few weeks. So, in a way, this is part of a story that's been brewing all year, but the market was a little bit more positive about the outcomes for trade, even if you go back a month ago. And now, of course, the market is seeing this as something much bigger. Maybe this is about the US trying to really contain China's growth as an economic power as well as a military power, and therefore these uncertainties mean that finally the market is beginning to look at the yen. At gold, for instance,
yep.
And even a little bit of Swiss franc. But of course, the dollar is in there too. And I think if we go back to 2017, certainly 2018, we have seen times when the market has moved out of risky assets such as emerging market equities and pushed straight into the US dollar. The dollar, after all, does have a better yield than the yen.
Andrew, we wake up this morning with futures gapping lower a little bit. We come back as the session progresses. What interests me is over the weekend, nothing really new. No fresh information. The Chinese stance hasn't changed. The president's stance hasn't changed. The data out of China, out of South Korea, nothing new there either. Where's the fresh catalyst going to come from?
Well, look, I think one of the problems that this market has is that trade is an issue. I absolutely agree. And I think it's a problem in part because some paths to resolve it, or some of the clearest paths to resolve it, would flow through weaker markets from here that would drive a different stance from the two parties. But it's not just trade, right? You have other things in the background, other cyclical indicators that are looking more worrisome. You have a flat yield curve. Our cycle indicators at Morgan Stanley turned down into downturn at the end of April. You've had some weak economic data of the U.S., the rest of the world over the last several months. So it's not just trade. I think it's other factors that are giving the market pause here over these usually difficult summer months.
Geoff, we talked about this before. The obsession seems to be about the shark closest to the boat. That's the trade story. But there's so much else happening in the world at the moment and so much anxiety around a growth story. Is that warranted?
So I think two things there. Firstly, we have to take into account this is a really fast start out of the gate at the beginning of the year, right? So that, I think, required a reality check, be it coming from trade or growth, debatable, but this is a welcome reality check in some sense. The volatility was still up there. Secondly, end cycle, late cycle, this debate is not going away. So not necessarily are we going to head to a recession or anything. The barometers don't point to anything like that, but we need to check our growth ambitions a bit as well.